Yes, my dear student. How are you all? I hope everyone is doing great. I am also absolutely fine. In this video, we'll discuss the solution for the second part of the comprehensive question, which is related to consolidation chapter, chain holding concept. Let me first give you the review of the question. See what was actually the question, then we'll come to the solution part. You can see in this question, there were three companies, Anand, Bajaj and Charan. Anand has invested in 750 equity shares of what Bajaj Limited. Means can you say it becomes 75%? Then Anand has also invested directly in 120 equity shares of Charan Limited. Means out of 600 shares. So it become 120. If you say 120 divided by 600, it is 20%. So they have direct holding of 20%. Then Bajaj has invested in 360 equity shares of Charan Limited. So out of 600, you can see 360 divided by 600. It means it becomes 60%. This was a chain holding question. Understood the chain holding in this particular question? Then the question is with you. Now I have given you in this question they have given you the reserve and profit and loss account at the beginning of the year for Anand, Bajaj, Charan. This information is not at all relevant. Means any opening balance information of parent company is not at all relevant. Then they have given the fair value of PP on 1st July, means on the date of acquisition. The date of acquisition was 1st July. They have given book value. Then bonus shares was given that Bajaj Limited has issued bonus share, but no journal entry has been recorded. Since the journal entry has not been recorded, there is one shortcut that you can ignore the entire bonus share adjustment and it will not affect the solution. So I will say the always use the shortcut because ICI also in one of the solution has used the shortcut only. So I will say ignore it. Whenever journal entry for bonus shares has not been done by the subsidiary company, you can ignore the entire bonus share adjustment from your solution. Got this point? Yes, sir. Then they have given in August, means after the date of acquisition, each company declared and paid final dividend of 10%. So can you say any dividend declared by subsidiary company is relevant? Any dividend declared by parent company already recorded, so for that no adjustment is required. Anand and Bajaj Limited had credited the dividend received to their PL account. So as per Ind AS 27, can I say whatever dividend received will be transferred to PL account. For that also no adjustment is required. So only we need to do some adjustment in the analysis of profit. Then I have given two transactions related to what? Intercompany transaction. One is related to transfer of PP from subsidiary company to parent company, and one is related to transfer stock from parent company to subsidiary company. You can see Charan Limited has transferred one machine costing rupees 10,000, which is sold to Bajaj Limited for rupees 12,000. So can you see in this case the unrealized profit of Charan Limited will be 2,000, that will be adjusted in AOP of Charan Limited. Then Bajaj Limited has then sold a machine to Anand Limited for rupees 13,000. So they have received the cost price for the Bajaj Limited is 12,000 and then they have transferred rupees 13,000. So here the unrealized profit for the Bajaj Limited will be 1,000. This will be also adjusted with the AOP of Bajaj Limited. Then during September 2001, Bajaj and Charan Limited purchased from Anand Limited goods costing goods for rupees 12,000 and 15,000. So okay, this became the sale price of Anand Limited, on which Anand Limited made a profit of 20% on cost. 20 by 120 will do. So you can see 12,000 into 20 divided by 120, it become 2,000. So in this there is a URP of 2,000, and then 15,000 into 20 divided by 120, in this the URP will be 2,500. This will be also eliminated from the stock, and can I say it will be eliminated from the consolidated retained earning because it become a downstream transaction. Got this point? Then they have given some information about measurement of NCI, and they have said measurement of NCI will be done at fair value. For this purpose, the market price of the equity shares of Bajaj Limited is 160 and Charan Limited is 120. This is the entire question. Can we come to the solution? So you can just first we'll calculate NCI. So already I have prepared one diagram. A Limited has invested, means A Limited holds 75% equity shares of B Limited and B Limited holds 60% equity shares of C Limited and A Limited directly holds 20% equity shares of C Limited. So what is the calculation? First working note in chain holding is the calculation of NCI. So for B and C means what will be the NCI from parent company point of view in B and C. So total holding is 100%. First we'll do minus direct holding by parent company. Direct holding is what, 75% in Bajaj and 20% in Charan. And what is the indirect holding? So indirect holding in Charan from the point of view of Anand Limited will be 75%, 60%, means A Limited hold how much in C? So A Limited holds 75% of 60% C, that will come 45%. So what is the total holding, whether directly or indirectly, in the Charan Limited from the point of view Anand Limited will be 20% plus 45%, that will be 65%. So NCI will be 35%. So NCI in B will be 25%, NCI in C will be 35%. Understood? This is the one of the important working note. If you have done mistake here, the entire calculation will be wrong. Then we'll come to fair value adjustment. So you can see I have given fair value of PP of Bajaj and Charan on the date of acquisition. This has been given. Book value has been also given. So you can see for Bajaj there is a fair value gain. For Charan there is a fair value loss. Understood? Now can I say, because I have given 10% rate of depreciation SLM, so additional depreciation for the post acquisition period, because the date of acquisition is 1st July, then the post acquisition period will be 6 months, so 6 month depreciation will be calculated. So 15,000, 10% into 6 by 12, 750, 10,000 into, for Charan Limited there will be some saving in depreciation because we have fair value loss, so there will be some saving in depreciation. So 10,000 to 10%, 6 by 12, that is 500. So what is net changes? Net changes will be 15,000 minus 750, that is 14,250, and 10,000 minus 500. So net changes means net decrease for the PP of Charan Limited will be 9,500. Understood? So this adjustment need to be, this working note need to be adjusted in statement of net asset while calculating the fair value of INA on the date of acquisition and the INA on the date of consolidation. Got this point? Then we'll come to AOP of Bajaj Limited. So you can see closing balance will take from the information given the balance sheet. So Bajaj Limited, you need to prepare AOP, means now there will be 2 AOP, 2 statement of net asset and 2 goodwill calculation. Everything will be 2. Understood? All working note will be 2. So you can see Bajaj Limited, you can go to the reserve and surplus. So it is the 30,000 and 10,000. 30,000 and 10,000 that we have taken from the information in the balance sheet. So 30,000, 10,000. Additional information about retained earning opening balance has been given. So we'll take the information from additional information. You can see 5,000 negative balance and 10,000 positive balance for reserve and surplus has been given. You can see 5,000 and negative 5,000, 10,000 has been mentioned here. So what is the profit? Profit after dividend will be, of course, retained earning 35,000, general reserve nil. Now we'll do final dividend paid. So final dividend paid is given 10%, 10% capital, and because bonus year journal entry has not been done, so capital is before bonus years only, so we'll take that capital only. Once again I am saying, if bonus year adjustment has been given and no journal entry has been done, ignore it completely. Means don't think about that bonus years now in any working note. Got this point? So 10% of 1 lakh. 1 lakh is the equity share capital of Bajaj Limited. Let us check what is the equity share capital of Bajaj Limited. 1 lakh. Got this point? 1 lakh, 10%, 10,000. So this will become what? 45,000, and general reserve will be nil. Now this will be allocated in pre and post as per the time ratio, that is 6 months, 6 months. So you can see 45,000 has been allocated to pre, 22,500, 22,500. Then we'll add opening balance. Opening balance will be added to 10,000 positive, 5,000 negative. So it is 5,000 net opening balance, means the total opening balance of general reserve and retained earning, that is 5,000 net amount. Got this? Then final dividend paid, because it has been paid after acquisition, deduct from post acquisition profit. So we have deducted final dividend from post acquisition profit, and there is one URP, unrealized profit for Bajaj Limited. The unrealized profit on transfer of machine to Anand Limited was 1,000. So you can see we have deducted 1,000 from the Bajaj Limited post acquisition profit. Got this point? So this become 27,500. This become 11,500. Correct? Okay, yes sir. Now we'll do similar working note for AOP of Charan Limited. Similar working note of closing balance will be taken, opening balance will be taken from additional information. Then once again finally dividend paid, so it is 10%, 60,000, that is 6,000. So this profit will be allocated to pre and post as per the time ratio. Once again 6 to 6. You can see 28,000 has been allocated in 1:1, and this 2,500 is also allocated in 1:1, means 6 months, 6 months. Got this point? Then opening balance will be added, then minus final dividend paid from post acquisition profit, then minus URP on PP. Now URP on PP for Charan Limited, they have transferred to Bajaj Limited at a profit of 2,000. So we have deducted 2,000 from post acquisition retained earning. Got this point? So this become the analysis of profit. Now we'll come to statement of net asset. Statement of net asset of B Limited. So of course we'll take equity share capital as per the information given in the balance sheet. Once again bonus share adjustment, totally ignore it. Got this point? Then other equity will take as per the AOP. AOP you can see we have already calculated how much we have calculated for Bajaj Limited, 27,500 plus 11,500. So you can see 27,500, 11,500 has been taken into consideration. Correct. Now in this question also goodwill has been given in the balance sheet of Bajaj and Chalan. So that goodwill should not be taken into consideration while calculating INA. So whatever INA you are calculating, that should be excluding goodwill. So minus goodwill, you can see in the Bajaj Limited balance sheet, when goodwill has been given 15,000, that you should remove. Because INA should be excluding goodwill. So minus 15,000 from the date of acquisition and date of consolidation we have done. Then fair value adjustment as per the previous working note we do. So there will be fair value gain of 15,000. There was a fair value gain and there is additional depreciation of 750. Correct. So this become the net asset INA on the date of acquisition, date of consolidation, and this become your post acquisition profit. Post acquisition profit will be allocated as per the holding ratio of Bajaj Limited, that is 75%, 25%. 75% belong to parent company, 25% belong to NCI. This has been allocated 10,750 into 75%, that is 8063. I have done rounding off. Got this point? You can also write on 8062.5 also. Got this point? Yes, sir. Then similar working note will do Sona for Charan Limited. You can say similar working note has been done. Equity share capital we have taken, other equity we have taken as per AOP. Then goodwill has been removed, and then we have done fair value adjustment as per the previous working note. Similar type of working note, but now here the holding ratio will be 65% and 35%. 65%, 35% we have allocated. So you can say 6,500 into 65%. How much it is coming? 4,225. So that has been done. You can calculate it. Got this point? Yes, sir. Correct. Here also I have done rounding off. Okay, sir. Yes, sir. Now we'll come to the calculation of goodwill or gain or bargain purchase. So Bajaj and Charan. So PC, for PC, can I say for PC of Bajaj Limited means how much parent company has paid to get control over Bajaj Limited. That is direct holding, so will take 90,000. This information will take 90,000. But for PC for Charan Limited, can I say it will be 15,000 direct investment? But there is one indirect investment. So this 52,000 has been invested by Bajaj to get the control, to get the equity shares of Charan. So how much they have invested from the point of view of Anand? So that will be 75% of 52,000. So 75% of 52,000, that is 39,000. 39,000 is indirect and 15,000 is direct. So 15,000 plus 39,000, you can see this is 54,000. Here most of you might have done mistake. So here it is a new point. This type of question has not been given in your ICS study matter, can be asked in exam. Have you understood this point? Yes, sir. Then fair value of NCI will take fair value of NCI. So Bajaj will find NCI already we have calculated. So number of shares of Bajaj is 1,000 shares, 25% NCI, and the fair value of equity share that is given in the question is 160. Correct. Similarly, 600 is the equity shares of Charan. What is the NCI? NCI is 35%. What is the fair value of equity shares as per the information given in the question? That is 120. So this become NCI. NCI you have understood? Yes, sir. Let me check once. I hope you have understood this point. Yes, sir. 100% correct. Now this become total. From this will do minus fair value of INA as per Sona working note. Statement of net asset working note means 63,500 we have deducted from C. Check karo, and you can see here it is 1,27,500 we have deducted from Bajaj. So this become goodwill. So goodwill calculation has been done. The total goodwill as per this working note is 2,500 plus 2,500 plus 15,000. 2,500 plus 15,950, so it is coming 18,450. 18,450 as per this working note. But there is one more goodwill coming in the balance sheet of Anand Limited, that will be also added. That become total goodwill in the consolidated balance sheet. Yes, sir. Yes, sir. Now we'll come to other equity. Other equity, this retained earning and general reserve, this balance you will take from the parent company balance sheet, and NCI will take from the previous working note. Now we'll do the sharing profit of B Limited as per AOP working note, and then in this we'll also add sharing profit of C Limited as per the AOP working note, analysis of working note. Now this one URP about URP included in the inventory of Bajaj Limited and Charan Limited means downstream transaction that already we calculated 2,000 and 2,500. That is also deducted from retained earning. Yes, sir. This will be deducted. This is downstream transaction. I hope this also you have understood. So this become your total other equity, and this become NCI. But now in this one adjustment is required. That is any means if you think in this way, how much we have taken, only 75% has been taken, 25% has not been taken. So 25% of 52,000, 25% of 52,000 is 13,000. So 13,000 deducted from NC and B. So 13,000 deducted from NC and B. This is one special point. However, I have said from my point to this adjustment is not correct, but I am following ICA solution. Explanation why it is not correct, I have already given my regular class. I have also given an explanation in my YouTube channel, but right now don't think about that. Right now whatever ICA do, that only we need to follow. So minus NCI say in investment in C Limited, that is 13,000 deducted from NCI and B. Have you understood this point? So this become your total NCI. Total NCI will be 29687 plus 27912, that is equal to 57,599. This will come in the CBS. Now we can prepare CBS consolidated balance sheet. So in PP it is book value plus book value plus book value. So 3 book value we have taken. Yes. Then there are 2 fair value adjustment. Correct. One is for Bajaj, one is for Charan. So 14,250 there was fair value gain. So net changes was 14,250, and there was one fair value loss for Charan Limited. That was net changes, means net decrease was 9,500, and then URP is minus 3,000. URP on the transfer of machine. Correct. Now in this, because the question says the transaction was completed on 31st 12, therefore no additional depreciation adjustment on this. However, the transaction, if the transaction would have been completed on 38 September, etc., then some additional depreciation adjustment is required. But till now that type of question has not been asked in CBS type of question. But I hope you have understood, because the question says the transaction has been completed on 31st 12. Therefore Bajaj and Charan, means whoever received that PP, means Anand has received that PP, so Anand has not charged any depreciation on that. Got this point? Yes sir, yes sir. Now goodwill 20,000 plus these 2 working note already we have done. This become the total goodwill. Current asset, there is one I think book value plus book value plus book value you have taken, and as per the balance sheet information you can see there was some due, means this 10,000 8,000, and this is 12,000 8,000. This will be cancelled, but 10,000 12,000 there is some check in transit, means there is some difference between 10,000 12,000, that become check in transit, and check in transit will be added in the current asset. And there is one URP of 2,000 plus 2,500 inventory, because current asset will include inventory, to minus 4,500 I have done. This become the total current asset. Then equity share capital will come as per the balance sheet of parent company. Then other equity as per working note, NCI as per working note, and trade payable as per book value plus book value plus book value. There is no adjustment, and the balance sheet will tally. Understood? Have you understood the entire solution? Correct. The same PDF you can download from the Telegram channel. Means if you want to see the working note, means I have in this PDF there are 2 solutions. One is the previous part 1 question, also the solution has been given, and part 2 solution is also given. I hope you have understood solution. Any point which you have not understood, you can ask in the comment box. I will reply there only. Don't worry about that. But I hope this type of question you are appreciating and you are understanding where you are doing mistake. I have seen that many of the students have given the answer, but no one has given exactly the correct answer, and this point you need to understand how to react in exam hall. If suppose your balance sheet is not telling, don't panic. Correct. Now because you have done the part in exam hall is totally different situation. Just try to understand. Right now if you are not able to do it, then exam also quite possible you are not able to do it, but whatever you are attempted in that you will get marks. So there is no need to panic, and just try to understand. Most of the students, they are not trying also. If you are trying, very good, I will appreciate that, because this is a very good question which I have given. This type of question has not been till now given in the exam, with the final dividend adjustment, with the fair value adjustment, goodwill adjustment. Correct. Now I have given, and I have given indirect holding also. So there are many things which I have given. I think if you have done, I will say I need to appreciate you. I'm happy that you are doing it. 5,000 difference in the balance sheet, 50,000 difference in the balance sheet, chalega, don't panic. But some of you have given correct answer about goodwill also. I am happy regarding that point. All the best. I'll come with the next part of the consolidation question, comprehensive question, which is related to subsidiaries and associate and parent company. If you want that, comment in the comment box whether you want that type of question or not, and how you are liking this particular idea. Just comment in the comment box. Do like this video, share this video with all your friends, and if you are new to this channel, don't forget to subscribe this channel. I'll be available for you to help you for the exam. Don't worry about that. Love you. Bye bye.